Hello, I'm Marianne Deveni. Will China overtake India as the biggest gold consumer? And what does that mean for the price of gold? I'm joined today by Bart Mellick, who is Head of Commodity Strategy at TD Securities. So we've heard a lot about China. What does it mean? Is it growing that fast?
Well, China is emerging as the world's fastest user of gold, or rather the biggest user of gold, and it's growing at the fastest rate. So far this year, we've probably seen some 800 tons of bullion move across the Atlantic and across the Pacific into China. This will likely continue at least for the next few years. We are seeing a lot of appetite for the yellow metal in China. Certainly people there are getting a lot wealthier, and they do like gold as a hedge against currencies, as a show of wealth, and of course a store of wealth. In the immediate future, those large flows into Asia aren't likely to be overly material for gold price. The reason is that we are seeing very, very strong speculative interest, or rather disinterest in the metal at this point, where a lot of investors who are heavily levered in the speculative market are shorting gold, getting rid of their long positions in response to higher yields that are expected as a result of the Federal Reserve's tapering program, or the reduction of asset purchasing by the Federal Reserve.
So we've seen the $1,700 gold down to about 12 something. Where do you see it going then?
Well, we see gold average about 1125 in the second quarter of 2014. The good news is after that we see it a little higher, trending towards $1,300 in the latter part of next year. We do like gold fundamentally, though for now speculative investors, in our judgment, will force it to lows we haven't seen for quite some time, and this will likely be very disheartening for many investors. We should expect to see ETF sales, even maybe not as strong as this year, but fairly robust ETF sales, and that will again be the reason why we're not going to see stronger prices for the time being, despite of the fact that China continues to buy at a very strong clip.
So the fact that we have what looks like a stronger U.S. economy is of course pushing down on gold. Is that what you would say?
I think that's a fair statement. It's becoming very expensive to hold an ounce of gold. Of course, gold is a zero-yielding asset. It doesn't have a coupon.
It costs money to hold gold.
And it costs money. There are vaulting charges as well, and there are financing costs. Meanwhile, equity markets, for example, have been doing very well. I think there's every expectation that the equity markets will perform next year as well, mainly because of the U.S. economy doing better. In fact, the global economy should do better, despite of the fact that we'll see a rise in treasury yields from 3 to 30-year on the curve. There is every indication that the U.S. central bank will keep short-term rates very, very low, and that's conducive to fairly decent growth down the road. The U.S. Congress may very well come to some sort of a fiscal agreement where we're not going to see a big fiscal drag on the U.S. economy. All those things imply strong equity markets, and that means in terms of other asset classes, it's for now going to be very expensive to hold gold rather.
So people are holding it as a bit of a type of insurance, or not so much now? Now they're kind of trying to get it right out?
I think there will be those who bought it as a source of wealth protection will keep it, but the ones that were trying to protect themselves against the existential risk of a collapse of a European banking system, for example, those people may very well get out at this point now that the world looks a little bit more stable than it be before. And at the same time, no one really fears inflation anymore. We do think inflation will move higher at some point, but for now there's very little reason to think inflation is a big threat, and therefore those people who held gold as a hedge against escalating prices are more likely to get rid of it than hold it.
All right, thank you very much, Bart.
My pleasure.
I've been joined by Bart Mellick, who's Head of Commodity Strategy at TD Securities. Thanks for watching. Before you decide to invest, make sure you do your homework and ensure that the investment is aligned to who you are as an investor, including your asset allocation and your tolerance for risk.